Ladies and gentlemen, good day and welcome to the KEI Industries Limited Q2 FY24 earnings conference call hosted by Monarch Networth Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Dani from Monarch Networth Capital. Thank you, and over to you, sir.
Yeah, thank you, Ray. Good afternoon, everyone. On behalf of Monarch Networth Capital, we're delighted to host the senior management of KEI Industries today. And we have with us Mr. Anil Gupta, Chairman and Managing Director of the company, and Mr. Rajiv Gupta, CFO of the company. We will start the call with opening remarks from the management, and then we'll move to Q&A. Thank you, and over to you, sir.
Yeah, thank you very much. Good afternoon to everyone. I'm Anil Gupta, CMD KEI Industries Limited. Along with me, Mr. Rajiv Gupta is there, CFO of the company. Thank you very much for joining us on this conference call. I'll give a brief about this quarter results, which you must have gone through. The net sales achieved with 1,946 crores. There's a growth in net sales at 21%. EBITDA in this quarter is 10.87%, which is grown by 27.53% compared to last year. Profit after tax in this quarter is 140.2 crores, which is 7.2% of the net sales, and grown by 31% compared to last year same period. The major highlight is that the export sale in this quarter has jumped significantly to 249 crores with a growth of approximately 79% compared to previous period last year. Sales through dealer network has grown by 14%, it is 923 crores against 808 crores last year. So the sales through distribution network is 47% of the total sales in the second quarter. The sales of extra high voltage cable is 169 crores, which is grown substantially compared to last quarter and last financial year. It is mainly because in the first quarter, some cables manufactured could not be dispatched due to non-clearance from the customers due to ROW issues. But we will see a healthy trend in the EHV cable in the coming quarters. The net sales in first half, 6 months, in H1 in financial year 23-24 is 3,729 crores, and growth in the net sales in first half is 17.51%. EBITDA has grown by 21% compared to same period last year, and EBITDA with net sales margin is 10.68%. Profit after tax in H1 is 261.59 crores. So the PAT has grown by 24% compared to same period last year. Profit after sales, net sales margin is 7% as compared to 6.64% last year. The total volume increase in the cable division on the basis of production for consumption of metal in H1 is around 26%. The pending orders book at the moment is 3,363 crores in the company. This does not include the retail orders, which we do not count in the order booking because they come and dispatched from the stocks or from the depots within a few days. The rest of the commentary is already available with you, which you may please go through, and we are there to answer your any questions. I'll brief you about the industry outlook. We see a reasonable and good outlook for the wires and cable segment in the coming quarters from the government infrastructure pipeline as well as from the real estate. We also are seeing good traction of export demand from our overseas customers. I would like to touch about the actions taken by the company for incremental capacity creation. Company has incurred a capital expenditure of rupees 221 crore during first half of current financial year. Earlier, company had planned a brownfield capex of 45 to 50 crore at our Chinchpada plant at Silvassa. Now that we have increased this capex to 110 crore in Chinchpada plant, which will increase our capacity for house wires and low tension power cables by approximately 800 to 900 crore per annum, out of which 240 crore per annum capacity has been in place in October 2023, and balance capacity and another similar capacity will be available by December in this year, and the rest will be available for production by end of this financial year. Another greenfield or big brownfield expansion is being done at our Pathredi plant in Bhiwadi with an approximate cost of rupees 110 crore, which will increase our capacity of low tension power cable by approximately 800 to 900 crore per annum. It will be operational in the quarter one of 24-25 financial year. That means by May or June 2024. This will enable us to grow by approximately 16 to 17% in current financial year, and also 15 to 16% growth in the next financial year as well. Apart from these brownfield capex, in financial year 23-24, the company has planned rupees 250 to 300 crore capex on greenfield expansion for cables and wires in Gujarat at Sanand. The construction has already started. We expect the first phase of the commercial production will commence by fourth quarter of FY24-25. Further, we will spend every year in capital expenditure approximately 300 to 350 crore for next 2 to 3 years, and to maintain a CAGR growth of 15 to 16% per annum. So we expect a good growth in the company's business from domestic market as well as exports in the coming financial year and the subsequent years. We are focusing on geographical expansion in the export markets and also expansion in the customer base, and we expect we are getting reasonable and good results from our efforts. I would like you to now come back with your questions, and we are ready for questions and answers on this aspect. Thank you very much for listening.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Thank you so much for the opportunity. Good afternoon. The first question was, is there a reclassification of dealer sales? Because I can see revisions in first quarter numbers.
Yeah, Rahul, हमारा एक binding wire product है that we have reclassified. Earlier it was shown in the institutional sales, so it has been reclassified. And some other regrouping also, so that's why we have reclassified. But the total sales remains same. Only institutional versus retail has reclassified.
Actually, binding wire was always sold through dealer network, so it was never a institutional sale.
Okay, get it. So, after this reclassification, could you help me understand overall the dealer distributor sales? I think my sense was we were growing faster there. What is the full year outlook for this segment?
This outlook is also there because in the wiring segment, if you see, we have grown in first half level is close to 22%, and in the cable, because of the capacity, we are diverting this capacity to the export now. So it is sometime export is higher, sometime dealer distributor is higher, sometime HP is higher, so that will remain the same. But as a overall, we will grow 16 to 17% in the current financial year, and the same kind of growth we will see on the basis of the capacity expansion which our CMDs are highlighted in the next financial year also.
Got it, sir. Very clear. Second question was on EHV full year, I think 550 to 600 crores, that guidance remains?
Yes, that guidance is remains.
Okay. Anything specific on steel wire sales? Because that looks like it's a bit volatile. Is it more pricing?
Basically metal. It's all depend on the pricing. So sometimes it goes up, goes down, but the production level is same.
See, the capacity is stagnant. We are not increasing the capacity over there. Our production in quantity has grown, but because of the substantial fall in the stainless steel prices, the value sales has gone down. But in tonnage, it has improved.
Got it, sir. What is the peak revenue here we can achieve, assuming current pricing for steel business?
We can achieve 750 tons per month at our best capacity, and at the moment we are operating almost at between 700 to 730 tons per month, month to month.
Got it, sir. And last question, after this brownfield which got completed, I think Silvassa 240 crores is completed and it will come in phases. Just to understand this better, the peak revenue potential for the company overall across all segments put together, if you would help me with that number as of September.
As of September, the capacity utilization in the wire and cable segment is close to 97% in the cable segment. But in the case of the house wire segment, it is 89%.
70%.
So now we are adding the capacity in the house wire also, which Anilji has said that it will be added by March, and in the cable also, which will be added in the phases, some in December, some in March. And then in the first quarter, our AlphaStreet plant will add. So approximately new capacity addition, like October we added 240 crore, another 240 crore will be added in December, and another 500 crore will be added by the our house wire division capacity utilization was 70% actually, so we have sufficient capacity over there. So this addition Chinchpada will be there, and then the AlphaStreet plant approximately 800 to 900 crore capacity for next year it will be there. So because of these new capacity addition in our existing locations, we will be able to grow the same kind of growth which we are growing in this financial year. And after that, the new greenfield capacity will be available.
Correct, sir. So basically, Bhiwadi and Silvassa adds about 2,000 crores of top line. Is that correct? Approximately.
What are you saying?
I'm saying Silvassa, the brownfield additions are adding up about 700 to 800 crores of top line, and the Bhiwadi
basically 11 to 1,200 crores.
So overall 2,000 crore.
And plus that is 800, so you are right, 2,000 crore addition.
Overall 2,000 crore worth of capacity will be available by end of this financial year.
Perfect, sir. I'll come back in the queue. All the best. Thank you so much.
Thank you, Rahul.
Thank you. The next question is from the line of Shubham Agarwal from Axis Capital. Please go ahead. Shubham Agarwal from Axis Capital.
Yeah. Hi, thanks for the opportunity. So just a question on the greenfield capacity additions that are coming. So can you give a sense what are the percentage increase in capacity or the peak revenue or the revenue potential of these capacities in phase 1, phase 2 and phase 3, similar the way you've given for the brownfield capacity?
So in greenfield, we are spending around 1,000 crore plus rupees over there. We will generate 4,000 to 4,500 crore capacity. The phase 1 will be approximately 2,000 crore capacity will be added by the fourth quarter of the next financial year, and balance we will be adding in the 25-26.
Okay. So on the brownfield, just reconfirming if I've got it right, in the Silvassa plant, 240 crore revenue potential capacity has been added in October 24. 240 crores will get added in October 23. 240 crores will get added in December 23, and the balance about 300 crore will get added in March 24.
Correct.
Is that right?
Correct.
Okay, sir. And Bhiwadi plant, Q1, the whole 900 crore will get added in Q1 FY24, Bhiwadi.
Yes. 24-25.
Right, Q1 FY24-25. Q1 FY25. And just a related question, how long does it take us to ramp up these capacities to 100% utilization? I believe brownfield capacities will be very, the utilization can come up really fast. So if we add in October end, 31st October, we added a capacity, we can reach peak utilization for that plant in, say, how many days?
No, since we are having the order book position, so in Spada plant, the LT power cable we are adding, we will be utilizing immediately.
Okay, doesn't take, it's not like a phase change. That, so, and a question on, you were answering the last participant that you're diverting your current capacities to exports, the cables capacities. I believe last quarter you were saying that you'll be focusing on servicing the domestic demand first and then going on to service the export demand. With that understanding,
we are serving domestic institution. We are continuing serving, but once we get the export order, we have to deliver on time. So that's why I said that this export has increased, but the dealer distributor, the cable division has not increased to that extent. But the market is available, and it will always be the case. Sometimes EHV will increase, sometimes HT will increase, sometimes low tension power cable increase within the product. And within the segment also, sometimes the dealer distributor will increase, sometimes the domestic institution will increase, sometimes the export will increase. So overall put together with the diversified basis, whether it is a product or it's a customer base, we will be growing in a 16 to 17% per annum basis. It is not the case like in the last quarter where the EHV sale was low, but still we have grown in this quarter. So again, our growth rate will be same, will be very, very stable.
Right. So I get that. So my intention of asking was that since you were saying that we'll incrementally divert more capacities towards exports, are you sensing any kind of a slowdown in the domestic demand for cables, maybe because of elections or something? That was my intention of asking.
No. There is no slowdown, but we have to create a balance with our available capacity for
See, now we are going to create a 2,000 crore worth of capacity by next year, and after that another 2,500 will be added. So if we are not tapping right now the new geographies, then how we will grow and we will utilize those new capacities then.
Right. Got it. Got it, sir. Thank you so much. That was all from me.
Thank you. The next question is from the line of Swati Jinjinwala from BOB Capital. Please go ahead.
Yeah, thank you for taking my question. First question is, what was the B2C contribution in the second quarter?
Please repeat your question.
B2B contribution.
The B2C contribution for the second quarter.
B2B contribution 27% the domestic institution and 15% from the export. And dealer distributor contribution is 47%. Apart from this, there is extra high voltage power cable contribution is also B2B, that is 6%.
All right. And could you give me the mix of the order book in terms of EPC, EHV, domestic cable and export cable?
Yeah, you can note down. EPC order book position at 804 crore.
Okay.
Extra high voltage power cable includes the little bit EPC portion attached to it, 725 crore. Domestic cable order book position is 1,548 crore, and export order book is 286 crore. Put together all is 3,363 crore.
All right. And lastly, on the CapEx front, so H1 we have done 221 crores. The 45 to 50 crores that we had targeted for Chinchwada, is that already included in the 221 CR?
Yes. Out of the 221, we spent around 43 crore in Chinchpada, 5 crore in Pathredi, and 140 crore rupees in our Sanand plant. And balance is for the maintenance capex and in our Kheda land, which is in Baroda.
Got it. And the incremental 65 crores for Chinchpada, the 110 for Bhiwadi will be incurred in H2. Is that right?
Yes. In Pathredi, H2 will be another 75 crore and balance 30 crore will be in the first quarter.
Okay. Okay. And lastly, the 250 CR greenfield, how much of that will be done in the second half?
Repeat your question, please.
The 250 crores for the greenfield capacity that we are adding, how much of that 250 crores will be incurred in the second half of FY24?
Sanand project, we have already spent 140 crore for the land. Another 150 crore will be spent in the second half. And close to 400 crore will be spent in the next financial year, and 300 crore will be in 25-26. That's how this 1,000 crore will be spent over there.
All right. Okay, that was all my questions. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Alok Deshpande from Nuvama Institutional Equities. Please go ahead.
Yeah, good afternoon, Anandji. Good afternoon, Rajivji. 2 questions. One, on the margins, we have seen a good margin expansion this quarter. Can this be attributed to the EHV revenues going up sharply, or is it just the operating leverage playing through? That was first question, sir. And so second question was, if you could just give me the volume versus pricing breakup for this quarter, that would be helpful, sir.
You see, now the EBITDA level will improve towards to 10.75 to 11% range because of the top line is increasing. So this kind of EBITDA level will be maintained in future also. And what was the second question?
No, sir. That was so it was about the volume and pricing breakup for the quarter.
In the first half of the current year as well as compared to the last year first half, copper price more or less is same. It is hardly 1 to 2% difference is there. So these prices are stable. Only aluminum prices has reduced by more than 10-12%. Otherwise, prices are stable now. So close to 26% volume growth on the basis of the consumption of metal on the basis of production we did, because our production is higher also. So that will also, because our level of production has also gone up, because now we have to improve our sales more than 2,000 crore a quarter. So because of that.
Okay, sir. Thank you so much, Rajeev. Thank you. All the very best.
Thank you, Alok.
Thank you. The next question is from the line of Kondinya Nimagada from Jefferies. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, firstly, a bookkeeping question. Can you provide us with the interest cost breakup for 2Q and first half?
Interest cost is very, very less right now, but still you can note down. Because practically all interest is expenditure only for the bank charges right now. So in first half, the working capital interest is close to 12 crore rupees, and bank charges is close to 2.86 crore rupees, and processing fee of the bank is close to 1.57. So put together all in H1 is 16.47 crore.
Sir, what is the breakup?
8.8 crore, close to 9.83 crore is the interest income on FDR.
Understood, sir. Sir, can you provide similar breakup for second quarter as well?
Second quarter, the working capital interest is close to 5.4 crore, and the bank charges close to 1.5 crore, and processing charges 0.5. So put together all is 7.53 crore, and the interest on FD is 3.8 crore.
Understood, sir. Sir, my second question is on the outlook front. I mean, you did speak about, real estate front. On the infra part, what are the key segments that are driving growth for you on the domestic side? Also, if you can provide some more color on the exports. I mean, we saw a strong growth during the quarter.
On infra side, metro rails, suburban trains, NCRTC, etc. That is number one. Number two is power distribution and transmission, and thirdly, solar developers, solar power projects. They are the major drivers. But in fact, all segments are contributing, including industries. But I just mentioned some of it.
And real estate.
And real estate as well, and the construction sector, and the new industries.
Understood, sir. Sir, how about exports?
Export is definitely there, and exports are from solar plants, solar wind farms, and power distribution and transmission.
Thank you, sir.
Thank you. The next question is from the line of Keyur Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thank you. Congratulations for good results to the team. So just want to understand on the house wire side, where we are speaking about faster growth. Historically, we have spoken about faster growth since we are growing on a low base. What kind of demand are we seeing? So first is the inherent demand because of a lot of real estate completions, and second, what kind of growth we envisage for ourselves, assuming it would be higher than the rate at which industry is growing. So first question is on domestic house wire.
In house wire segment, as we have earlier guided also, to grow by 22 to 25%. So we are in line with that also. With regards to which we all are witnessing in the top metro cities since last 1.5 years. So that demand is already there on ground now. And apart from there, in individual bungalows are being made by each and every city and town. So that demand is continuing since last so many years, and it will be continuing. For our case, since we are increasing our geography, we are increasing our reach also in the houseware segment. We are adding more and more number of retailers under the dealer distributor. So we are growing 22-25%.
Just one follow-up. So against that 20 to 25%, what would be the inherent industry growth? I mean, industry itself is also going at healthy pace?
The industry will be growing 12 to 13% since all the smaller players or unorganized segments, they don't participate in the industry growth because of the management bandwidth and the capital they are facing the scarcity. So the smaller company does not grow their sales to that extent.
Okay. And second on export, the kind of growth that all the, including KEI, all the Indian companies are seeing, it is, anything has changed, any tariff or non-tariff barriers on import from some specific countries, or this is just that they're also capex spend is driving growth for companies in India? So any structural change has happened?
See that before COVID also, in our case, our export was close to 13% before COVID. During the COVID, we were not able to add new customers and new countries. So that's why sales dropped to 10% of the total sales. Again now, marketing team was able to add more geographies, more new countries. So Anilji has said that this year will be close to 12 to 13% of total. And by next year or another year, his focus is to grow exports close to 15 to 17% of our total sales, irrespective of the market of our sales. So that's why the focus is there. So now Anilji can contribute more about what the US is going on and the Europe is going on, or the other oil and gas sector products which we are selling that going on. So Anilji, please explain.
There is a good spending in power distribution and infrastructure in United States, and capacities over there are definitely lacking because for over many years they have not increased their industrial base and for manufacturing of cables. And definitely we are getting some benefit out because of China plus one policy followed by Europe and USA. So we are getting the opportunity, and those opportunities are converted into business.
Okay, understood. So thanks a lot and all the best.
Yeah.
Thank you. The next question is from the line of Srinidhi from HSBC. Please go ahead.
Hi. Thank you for the opportunity and congratulations on good set of numbers. So I have a question on exports business. There seems to be significant investments happening in the Saudi Arabia market, both in hydrocarbon sector as well as overall infrastructures. Wondering, does KEI has presence in that market from both certification point of view, business development team point of view, and execution capabilities?
We have all the certifications in place, but at present our sales to Saudi Arabia is not significant. But in other Middle East countries, we are present significantly, like Abu Dhabi, Kuwait, Qatar, etc. We are trying to make some inroads in Saudi Arabia, but especially focusing on oil and gas sector, Saudi Aramco, etc. And we hope that we will get a breakthrough very soon over there. But in other markets like in US and in Europe, we are steadily getting inroads, and we hope that we will be doing a reasonably good work in next few years in these markets.
Okay. Is there any legacy reasons why we are less present, like companies less present in the Saudi market versus rest of the Middle East countries?
Actually, Saudi has already a substantial local capacity of manufacturing cables. There are several companies producing cables in Saudi, and it is only because of the excessive demand at the moment we can get opportunity. Otherwise, they are themselves a large producer of cables within, and they don't allow imports easily when they have their own manufacturing capacity.
Understood, sir. Yeah. So we have seen EPC business scaling up in this quarter. Is it in tune with the EHV business scale-up we saw, or is company trying to scale up the EPC business?
No, it is mainly because of the EHV, because in EHV, almost 20% of the supply goes to the EPC. So because of that only.
Right.
No other factor. Otherwise, the pure EPC contribution of the total sale has remained 4%. Earlier it was 5%. This year it will be less than 4%.
Right. Yeah. And last one, if I may, I just want to understand, would you say so that in Q2, you missed some of the revenue because of capacity constraints? And if yes, is that a meaningful number?
See, our target, which we have earlier set for the current financial year, to grow 16 to 17%. So we are maintaining that, irrespective of the market is available, because we want to run a debt-free company that we are running. So under risk mitigation plan and capital allocation, we cautiously have made the strategy that 16 to 17 to 18% kind of growth we will be continuing maintaining for next 5 to 7 years. Not for 1 year, but we are saying for next 5 years.
Last one, sir, if I may, again, the 16% growth, that 16 to 17% growth that you're guiding for the next year, does it factor in the greenfield plant commissioning in Q4 and there's some dependence on that? Or even if that, unfortunately, if it slips into the following year?
For the next year, we are not taking, because only the end of the fourth quarter that's coming. That's why we have increased the capex in our existing Chinchpada Silvassa plant, so that we will have the sufficient production capacity to grow 16% in the next financial year.
Right. Thank you for answering my question, and all the very best.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Yeah. Hello, Anilji and Rajivji.
Hi, Anilji.
Great execution again. Sir, I just have one specific question on your expansion and export strategy. So exports may, can you just help us understand, and maybe Anilji can help here, next 2-3 years, how will we move in, LTHT and maybe branded house wires if also that you're targeting, because you will eventually start developing channels there, maybe in US market and non-US market. So how should we think about the composition of export business for KEI for the next 3 years?
Our exports will be mainly focused on export of cables. We are not targeting export of wires to anywhere, because wires in every country, they have a lot of local capacity, and the competition is from the local suppliers is there, and also a lot of stocking is required everywhere to sell this product because of the instant delivery requirement from the market. So we are not we have no sales of house wires from our plant anywhere, and we are not focusing on it.
Fair.
And we are really focusing on LTHP and EHP cable.
Sure. Sir, so, nobody, I think I would definitely don't have any doubt on the potential we have for export market. But generally speaking, if you compare with the conditions that you have, the terms of contract that you have in supplies in India, vis-a-vis the export market, generally, how is the working capital different for us in exports?
So in export also the same, we are supplying to institution over there. Same case with India, we are supplying to institution. So close to 2.5 months or 3 months is the normal period for the
normal. Payment period is 60 to 75 days, even in the south.
Okay. Sure. Thank you very much, and good luck, Anilji and Rajivji.
Thank you, Anilji.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Good afternoon, gentlemen. My first question is more of a follow-up from the previous participants' questions. Sir, I want to know on a more macro term as to what is the demand supply for cables in the international market, and what kind of time frame visibility do we have in terms of getting very good orders? So, like we have a strong tailwind in the domestic market for cables, is it also internationally, and can we assume that for the next many couple of years that will continue to be? So first question is that.
We don't have any data about demand and supply in the international market. It varies from the country to country. But the kind of markets and the customers we are developing or we have developed so far, we see a consistent demand of cables into several projects over there which we are doing, like wind farm. I mentioned wind farm, solar farms, solar power developers, and also a lot of customers who are using our cables in manufacturing plants over there, and also in the power transmission and distribution side. It is very difficult to predict. Our capacities are not that large that we are trying for large international markets.
Understood, sir. But then what I wanted to know is there is a strong opportunity, right, from the international market as well for cables particularly.
The opportunities are there. As we said that we have the strategy to grow 16 to 17% per annum. So our focus is to add more and more geography and add more and more customers in our kitty, so that any given point of time, at any time the retail is slow or domestic institution is slow or some export, then can be contributed to export. Otherwise, we have to grow only 16 to 17%. Our target is not to grow 30%.
Understood. And so one follow-up on this question itself. Sir, is the international market a more brand-conscious market for cables, or is it not that? Just some light on that.
International market is not brand conscious. International market is qualification conscious. Where the kind of segments we are supplying, we have to get our products, certified by the regulatory agencies over there. Like in US, we have to get mandatory UL certified cables. In Europe, we have to take their construction protocol registration in different countries, CPR certifications. So in every country, there are some certifications required which we have obtained and using for the export to that country. So the certification is given to the company. So naturally, that brand got registered in their system. But if we say that we are selling branded products like Louis Vuitton or like that, that is not the case in case.
Understood. So why I asked this question was, I understand that wires is absolutely not it's perceived more as a commoditized product internationally. So just wanted to understand where R&D spend for cable is more.
First of all, I mentioned that we are not selling or trying to sell wires in the international market. We are only selling cables in oil and gas, in power and transmission, where the product is approved by the using the institutions or authorities, and the product is certified to be used in that country. Like in India, we need mandatory BIS, BIS certification. In every country, there are some certifications required.
Understood. Sir, and my last question is on the margins over a longer period, not in the medium term or short term. So given that all your greenfield and brownfield capacities will come into play, say by FY26-27 at good utilization levels, so then I believe that sharp operating leverage benefits should kick in. So then where can we see these margins, EBITDA margins, moving to probably in the medium term, say over 3 to 5 years?
At least 1.5% will improve by 27-28.
Understood, sir. All right. Thank you so much and all the best, sir.
Thank you.
Thank you. The next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers, sir. So my question would be, so obviously you have already commented a lot on the demand front. Like, there is one bookkeeping question. So if I look at the unallocable expenses, has there been any change in classification? Because when I look at the EBIT margins for wire and cables have improved significantly, but on the other side, unallocable expenses have also shot up. So can you throw some light, or this is just one-off quarter?
No, expenses depend on the raw material, operating expenditure, and the EPC division. Because in EPC division, some quarter the sale is higher, so because there is raw material is very, very less. Expenses is mainly. So that's why you see the EBITDA margin.
Okay. But there is nothing exceptional, or probably it should be normal in the due course.
Yes, it is normal.
Okay. Right, sir. And also when I look at from an export point of view, obviously this quarter on YOY basis numbers look very strong. So probably how should we build in the coming quarters and probably from 25 perspective as well, if you can throw some light, because obviously you have thrown a lot on the demand side. And
first of all, Manojji, as we have earlier spoken also to you or some other investors, we have to grow 16 to 17 to 18% kind of thing.
Right.
So we need to take care. It should not miss whether for a particular geography demand is having or not having. That's why we have developed over a period of time the domestic institutional sale, which is a high entry barrier, and international export sale, which is again a very high entry barrier. Then we developed to maintain a low working capital for the dealer distribution segment. And every time, all the three segments will not gradually increase. Sometimes one will expand more, sometimes another will expand more. So that's how we maintain the overall growth, like you are maintaining the portfolio. So we are maintaining the portfolio. Sometimes export increase, sometimes domestic increase, sometimes dealer distributor increase. So ये आपस में reshuffle चलता रहेगा. Sometimes yes we increase. अब कई बार आप लोग पूछते हो EHP नहीं बढ़ा तो क्या हो गया, तो भी हमने उतना ही ग्रोथ किया, है ना. जैसे हमारा लास्ट ईयर EHP नहीं था तो भी हमने उतना 20% ग्रोथ किया. तो ये बेसिकली एडिशनल वर्किंग टुवर्ड कस्टमर, टुवर्ड ज्योग्राफी, टुवर्ड सेगमेंट, टुवर्ड प्रोडक्ट is mainly to insulate the risk overall. So that because of this, our sustainable growth model is there, and we are happy with 16 to 17 to 18% kind of growth. To maintain that, we are working that way.
Right, sir. So lastly, so when we do our checks at the ground level, so probably one thing what we are able to figure out is that cables are doing better than wires, and B2C has been a bit sluggish on a relative basis versus institutional.
Nothing is better or worse. Cable का demand different sector में है, wire का demand different sector में है. First of all, no product is comparable to each and every product.
Correct.
We are running a portfolio of the products. Whether wire sell more, CHP sell more, LC sell more, SC sell more, like this. तो आपस में मैंने जैसे बोला कि product wise भी ऊपर नीचे होंगे, segment wise भी ऊपर नीचे होंगे, geography wise भी ऊपर नीचे होंगे. But we need to take care of 17% kind of growth.
Right, sir. So my question was like, this is for the industry. So industry, we are getting this feedback. Obviously, you guys are doing far better. So, if like probably, how do you see the overall demand picking up, especially for wires?
Overall demand earlier it was 11 to 12%. Right. Now it is 12 to 13% with respect to the industry as a whole for wire and cable segment, because lots of infrastructure capex from the government side going on, like in the road, in the rail, in the metro rail, in the rapid rail, in airports and the seaports. Then the government is pushing towards affordable housing. Then government is pushing towards the generation of the power through the solar, through the wind, and through the traditional route of the thermal. Then the government is focusing on to attract the manufacturing, all the manufacturers worldwide to create the manufacturing hub in the country. For that, they have started through the PLI scheme, and slowly they are adding more and more products under PLI scheme. That's why the private capex from overseas market is coming in India. Apart from this, lots of refinery expansion is going on because of local consumption. Lots of fertilizer units, lots of cement units, steel industries, pharma, IT, everywhere you are seeing or you are witnessing lots of investment is going on because the affordable generation is there. Because of that, the consumption is higher, the demand of consumption is higher, so the supplier will create the supply.
Right. Got it, sir. So thanks a lot, sir, and wish you all the best.
Thank you.
Thank you. Before we take the next question, in order that the management is able to address questions from all participants in the conference, we request participants to please limit your questions to 2 per participant. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you. Thank you for taking my question. Sir, just one question in order to understand the industry better. Like, if I look at the last many years, the sector wasn't generating a lot of cash, and which means everybody had to do a balancing act between, how much is involved in inventory, how much is involved in capex, and how much is the free cash flow that every company in the sector was generating. Now, last 2-3 years has been phenomenal for the sector. It seems everybody is making money. Do you worry that we could get to a stage where there is more investment in the sector, i.e. you are adding capacity, some of your peers are also adding capacity? Do you think this could be a challenge? Like, today it's not a bad problem to have, where you are saying I'll grow 16-17%, but that's because of capacity, not demand. So I'm just trying to understand, do you foresee that there is over-investment happening in this sector today, that maybe in some time we could be in a situation where industry is oversupplied? Just wanted to get your sense based on whatever you've seen and you heard from competition.
It may happen, but I think it will not happen that rapidly. The kind of investment and capex required to augment the capacity is substantial, and not many companies have that kind of capabilities to invest present existing players. And I don't see any new players are coming up in this. And to insulate ourselves from variation in the demand in the domestic market, that is why we are creating export markets also, and in different geographies, so that we are not dependent on any particular area. Although domestic will always be our main bread and butter, but maybe so that sometimes if the demand is less or many players are there, margin may be impacted by 1 or 2%. But we are already working on very low margins and working and operating a debt-free company. So I don't see any risk factor so far as to us is concerned, and I don't foresee any new players coming up in this field.
Okay, so no new players you've seen really come or announce. Okay, yes. This is very helpful, sir. Thank you.
Thank you. The next question is from the line of Keyur Pandya from ICICI Prudential Life Insurance. Please go ahead.
Thanks for the opportunity. Sir, just to get clarification, you mentioned about 16-17% growth for this year and going ahead also. Now, of this overall growth, if house wires is growing faster and export is also growing faster, so domestic institutional cable business should steady state grow at 12-13%. Is that correct understanding?
It always depend on the mix which we are having the order book position, because ultimately we have to grow 16-17%. Whether from export market we get or we are serving or domestic we are serving. We have to balance, because as Anil has said that we will maintain all the customers so that any given point of time we should not be having any risk.
So what I think on a low base, we are growing faster in the house wires. I think 20% plus you have mentioned. So that portion of the sales is growing faster. Export also is growing as a percentage of sales, so that is also growing faster than the growth.
नहीं रहेगा क्योंकि मार्केट में डिमांड बहुत है। सर देखिए मार्केट में डिमांड का कमी नहीं है, लेकिन अपनी कैपेसिटी के हिसाब से ग्रो करना है ना। कैपिटल भी तो लगाना है, तो कैपिटल एलोकेशन जो आप लोगों ने सिखा दिया है वो तो कंटिन्यू करना है ना।
Okay, got it. Perfect. ठीक है, thanks a lot. Thank you.
Thank you. The next question is from the line of Anupam Goswami from SUD Life. Please go ahead.
Hi, sir. Sir, can you tell me the outlook on your EHV cables and give me a little breakup of your segment-wise, let's say, margin breakup, like say what was in the EHV, what was in the cables and wires this quarter. And the next question is on the... Yes,
I can give you the broader figure at the average level because we don't have any calculation on a product-wise margin because our factories are same. But normally, while we are selling to domestic institution side, which is a high entry barrier and a tender-driven sale, their EBITDA margin is 10 to 10.5%. And while we are selling to export market, EBITDA margin is close to 11%. In extra high voltage power cable, because of the low competition in the domestic market, EBITDA margin is 15%. And the dealer distributor business, whether it is a wire or it's a cable, EBITDA margin is close to 11%. So, and in EPC division, the margin is close to 12%. So, put together all, the margin comes between 10.75 to 11% kind of range.
And so, what is your outlook on the EHV segment?
The outlook on the EHV segment, we have the capacity of 550 crore to 600 crore capacity. So, that we are utilizing.
Do you see a strong traction going forward, or do we see some slowdown as the election year is coming, or in the last quarter or so?
आपने लास्ट क्वार्टर भी देखा है, अगर EHV कम था तो भी हमने ग्रो किया। आपने लास्ट ईयर भी देखा, अगर EHV कम था तो भी ग्रो किया। सेकंड क्वार्टर भी देखा, EHV ज़्यादा हो गया तो भी हमने उतना ही ग्रो किया, 20-21%। तो इतना ही ग्रोथ होता है बिकॉज फैक्ट्रीज मैन्युफैक्चरिंग कैपेसिटी पर डिपेंड करती है, कैपिटल एलोकेशन पर डिपेंड करती है, हाउ मच वी नीड टू पुट इन वर्किंग कैपिटल। So everything is required through the capital only. Even though the market is there, if we target for 25 to 30% growth, then what will happen? We will again end up with the debt position, which we don't want. And we are clearly guiding to every investor that whatever internal approval we will be generating year-on-year basis, we will be deploying to increase our capacity to that extent, and it will be sufficient for 16 to 18% kind of growth.
Thank you. Before we take the next question, a request to participants to please limit your questions to one per participant. The next question is from Rahul Agarwal from InCred Capital. Please go ahead.
Sir, thank you for the repeat opportunity. Just wanted to take this point on EHV forward. Nothing related to KEI, but overall, what would be the EHV consumption today in India? I mean, this current year, would you have any idea, sir?
Should be close to around 2,500 to 3,000 crores.
And India still remains a three-player market?
I think 3 or 4 players are there totally.
Rahulji, any new player comes, it will take another 3 to 4 years to 5 years kind of time to put the factory, and then got the type test approval and the pre-qualification process. Any new player comes in the EHV, it will take at least 4 to 5 years.
Yes, sir, I completely understand that. I was just trying to understand, KEI did like 400 crores of EHV sales in fiscal 20. Today, this year, we should do, we'll utilize full capacity. We have a large import, available there. Can we increase our capacity and take advantage and do more EHV sales? Is that
क्या नहीं करना है वो पहले बता दिया। हमारी जो ग्रोथ है वो मार्केट में 50% की हो, 100% की हो, हमारी जो ग्रोथ रेट है वो 16 से 18%। डिसिप्लिन्ड अप्रोच से हम लोग आगे बढ़ रहे हैं और इसी तरह का सस्टेनेबल मॉडल हम अगले 10 साल 15 साल भी चलाएंगे। पिछले 15 सालों का KEI का CAGR ग्रोथ 14% था, तब हमारा डेट भी था, अब हमारा डेट नहीं है, इसीलिए हम अगले 10 से 15 सालों का ग्रोथ टारगेट आपको 16 to 18% काइंड ऑफ CAGR की बात कर रहे हैं, नॉट फॉर 1 year और नॉट फॉर 2 years.
Sir, very clear. And EHV, last question was, who is the end client? Is it Power Grid only or is it, the state board?
It is not the client. Power Grid only is one client.
High voltage cable is purchased by either the state transmission utilities and central power transmission utilities, and now it is purchased substantially by the companies who are developing data centers and also the solar power developers for evacuation of power which they are generating in their solar plants.
So this is not a government business, right? I mean, to be very clear on this.
No. The state transmission utilities is a government business.
So almost 50% is government and 50% is
the central utility like Power Grid is a government business.
Yeah, of course. As Rajiv ji said, I think 50-50 hai abhi as of now, and incrementally it should remain like this, right?
Yes, sir. Yeah.
Okay. Got it, sir. Thank you so much. Thank you. All the best.
Sure.
Thank you. The next question is from the line of Kondinya Nimagada from Jefferies. Please go ahead.
Yeah. Hi, sir. Thanks for the follow-up opportunity. Just one question I had. You spoke about 221 crores of capex in one hedge. So just wanted to reconcile, what is the full year capex for FY24 and FY25 that we are now looking at, and what was this number earlier?
You see, earlier the greenfield capex not there. So now the Sanand project, which is the major greenfield project, wherein we need to invest 300 to 350 crore each year. So in the greenfield, we are investing 300 crore this year, and the next year 400 crore, and in 25-26 300 crore. For the brownfield capex, we have incurred in first half 48 crore rupees, and we will invest another 150 crore rupees in the current financial year in the second half in our Dewari Patedi plant as well as in our Chinchpada Silvassa plant.
Understood. So that roughly translates about 500 crores of capex for FY24?
In the current financial year, because the land value is also there in that.
And what was this number earlier, sir?
Earlier means?
Prior to... it's okay, sir.
Only there was maintenance capex. And okay. Plus the Silvassa a little bit brownfield capex. Not more than 40-50 crore rupees.
Understood, sir. Thank you very much. All the best.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
Summarize. Thank you very much for this question answer session and listening to us. We are available for any further questions which you may have. Overall, I can say that company is on a healthy trend to grow and in a disciplined manner with its own internal generation of resources and the money, and will be growing in a disciplined manner so that to remain largely debt free over a period of time. Thank you.
Thanks everybody.
Thank you very much. On behalf of Monarch Networth Capital, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.